for people watching at home, this isn't like Robinhood getting people to take more risk than they want to. Here's what these kids are doing, and they're psychopaths.
And then on the customer side, they might have to deal with the SEC on this case.
My face looked the way it did, was the jaw dropping, because it's like those people you read about that, like, there's $1 million accidentally put in their bank account and they spend it.
Wallstreetbets, it's been called many things before. It's best known by the tagline, like 4chan found a Bloomberg terminal. Here's one way to put it. Wallstreetbets is like r/stocks, but with a little impulse buying of crappy stocks and throwing money at options hoping for 100% winning returns. So actually, it's nothing like r/stocks. I'd say it's full of people who have gambling addictions but don't want to leave home to go to the casino. The forum was founded back in 2012 by Jaime Rogozinski, who is known on the forum as Jartek, an entrepreneur living in Mexico, who wanted a place where sophisticated investors could swap tips about high-risk, high-reward short-term trading strategies. In r/investing, all the talk was about long-term investing in index funds, Rogozinski recalled. Whenever I would go on Reddit and post a comment or question, I would get berated for not being a good investor. Wallstreetbets was created after he was run out of r/investing for advocating risky bets. The rivalry lives on to this day and extends to other finance-related subs. Rogozinski, who is not a huge fan of memes, insists that he created Wallstreetbets as a serious forum for learning. But whatever his intention, the site soon attracted an unruly mix of trolls and pranksters, including, notoriously, Martin Shkreli. The former hedge fund manager, who is now serving a 7-year prison sentence for securities fraud, once hosted a question and answer session on the subreddit and was made a WSB moderator. Shkreli continues to be one of the site's favorite topics, along with Tesla founder Elon Musk, known as Papa Elon. The pair are regularly mocked and celebrated with memes and other jokes. The line isn't always clear. But Wallstreetbets is best known as a place where users announce their bets on the market, which are often centered on so-called meme stocks like Tesla. Securities that have transcended their role as financial instruments to become a sort of economic inside joke. The biggest and boldest of these bets are known as YOLO bets. Winners brag of spending their newly acquired fortunes on yachts and tendies. That's chicken tenders, which are seen as making up the ultimate luxury lifestyle. Losers are mocked, often in language that's crude and offensive, but also with a certain sense of camaraderie. After all, losers are the ones providing the most entertainment. The mix of boastfulness and nihilism that pervades Wallstreetbets makes it difficult to tell how much money is really at stake. One of the best known incidents to take place on the site involved a Canadian user who went by the name of fscomeau, who shared a video in which he gambled away his $1 million inheritance.
No! No! No!
The video is now believed by the Wallstreetbets community to be an elaborate fake. While it's hard to know which Wallstreetbets trades are genuine, the dozens of posts showing pedestrian losses of a few hundred or a few $1,000s suggest a good deal of them are in fact real. In the fall of 2019, Wallstreetbets gained new fame when its users discovered and subsequently exploited a glitch in Robinhood's trading app. The bug allowed Robinhood Gold members to leverage seemingly limitless amounts of capital. Users raced to one-up each other with increasingly large positions, with one trader saying they turned a 3,000 stake into a 1.7 million position. The bug's discovery is loosely a result of volatile trading behavior promoted on Wallstreetbets. Forum member Eddie Choi became an overnight celebrity on the subreddit when 2 high-risk option trades led him to turn $766 into $107,758 in late September. Not all users win notoriety with massive returns. User ControlTheNarrative used a $2,000 deposit to trade $50,000 worth of Apple put options. When the tech giant traded higher the day the options expired, the trader lost the borrowed money and subsequently posted a video of their reaction to YouTube. Quote, "Why did you do this? Because I could. And if you don't, then you necessarily don't win," the forum member wrote in a post on October 31st. Robinhood later closed the loophole and called on the few traders using the glitch to pay any debts before their accounts were closed. At least one academic study of day trading suggests that about 8 in 10 investors end up losing money within the 6 months. Those losses only stand to be worse when investors use instruments like options to magnify returns, as many on Wallstreetbets do. For his part, Rogozinski disclaims responsibility for what he sees as investors' bad judgment. Quote, "If you have money, you're probably old enough to understand the consequences and live up to them." Thanks for watching. If you guys enjoyed the video, be sure to hit that like button and subscribe for part 2, and I'll see you guys next time.